Are the current increases actually being driven in a healthy way? Is the foundation beneath these gains built out of matchsticks? Is all of this going to collapse? What about traps for those going long? Should we be taking profits? Or should we keep watching the gains for a bit longer, unfortunately driven by greed? A hugely important on-chain episode packed with information that will show us whether these gains are really built on something solid or if we should slowly start considering an exit from this market. Judge for yourselves. Watch. Make yourselves comfortable. Let's not drag this out. So, my dear viewers, to start things off, we're bringing in a tool you haven't seen before. It's a new tool that's available exclusively on CST Pro, which is my paid server, and to put it simply, it's like a high blog on steroids that you can use there as much as you want. We can see in it that the $68,000 level is our critical and final stronghold for maintaining further growth and avoiding entering a bear market. Exactly on this tool, if we look from a long-term perspective, we can see where the greatest liquidity is, because usually the largest wall, I would call it a liquidity wall, on the order books and so on, is the last stronghold, after which everything below it is typically consumed almost immediately. So of course we are still very far from that $68,000 level. So for now we shouldn't be worried about any major drops. But it's definitely something to keep in mind. We shouldn't be afraid of these drops, not even considering how high we've climbed at this point and how much liquidity there currently is, around 116,000. But not only on the on-chains, but also in my own analysis, as I showed you, the range between 115 and 118,000 is my area for a possible bounce, from which I'll be trying to catch small shorts again. Why will I be taking small shorts? Because I still have spot positions, I haven't sold everything, and on my Twitter you can see a full detailed post about what I did, how much Bitcoin I sold, how much Ethereum, my outlook on altcoins, and exact screenshots showing what my portfolio looks like. So it's worth checking out, worth following, because I share a lot of dumb information there. Quite a lot, actually. So right now, we're looking strictly at liquidity. And here you could actually say that purely from a technical perspective, looking at the chart and that first on-chain chart, we have the possibility, or rather a higher probability, of taking out that top. However, this probability won't always work out for us, so it's important to keep in mind that, after such a strong, impulsive rise, we haven't seen any meaningful duck correction here. At least 38.2%, which is the known standard shallow correction that should occur after such strong impulses. And here, even if we calculated the entire swing, 38% at this point would be around $93,000, which definitely shouldn't be underestimated. Open interest and the number of liquidations are currently higher at that 68,000 level than at any other point on the chart, so we can see that this area is really heavily loaded. On the other hand, at the top, the $115,000 to $125,000 levels are areas with many open interest orders. So if we break through the current all-time high, there is a huge chance we will head straight for those regions. This tool, my friends, is fantastic. I believe that compared to it, High Block is really far behind, both in terms of the amount of data and the visual way that data is presented. And now, let's go back for a moment to the capital rotation net position change, a historic moment. For the first time since January 8th, ETH has officially come up for air and surfaced from underwater. The question is, was it just to dive even deeper again? Or will it want to stay afloat on the surface? Now, just like a mother-in-law usually likes to do in the bathtub, after more than 4 months we finally saw inflows into ETH, not just outflows for Ethereum holders, especially those who bought in at $3,000 or more. This is a glimmer of hope that they might break even on their investments. Of course, let's not get too excited or carried away. We'll see what happens with this coin in the coming days. And in a moment, we'll also take a look at the chart. Ethereum has performed very well in recent days, you could say. This is due to factors such as the Spectra update, extreme undervaluation compared to Bitcoin, and above all, the lack of faith people have in ETH. In fact, if we look at the ETH to BTC chart, we can see a beautiful rebound, a remarkable show of strength compared to Bitcoin. Likewise, on the chart, it's an incredible run-up, and I'm also very happy because my average purchase price is at the level of $1,600. I was buying at $1,450, $1,750. So for now, that 1,600 average has been established, and I'm satisfied with my profits. Around 2,100, 2,200, I took my first small take profit at the 10% level. At this point, around 2,800, 3,000, I'll be taking profit. Number 2. The downward trend from the lower axis on ETH, my friends, has been broken here. Definitely broken since we even broke through $2,500. The question is, for how long, and is this just a correction in the downtrend, or has the time finally come for ETH to show its claws? Because remember, in every downtrend we have fashion on pantanj, so unless we have corrections. These are corrections that don't necessarily mean we're heading for a new ATH. In any strong move, a correction is bound to appear. So at this point, we've obviously made a change of character. We haven't made an overbalance yet. The overbalance will only occur above $2,877. And that's when we can say that the first signal is lighting up, in terms of possibly breaking out to a new ATH. A lot of money has also flowed into Bitcoin. As you can see on the chart, these are the first significant inflows since February 12th. However, it's clear to the naked eye that the money currently coming into Bitcoin is just a fraction of what was coming in during March and November of last year, when we were breaking, my friends, the ATH. We'll see soon whether we're just getting started and heading for the moon again, or if we're actually setting up one big bull trap or even a market scam. Listen, there's definitely no reason to get excited either way just yet. The chart looks incredibly bullish from a technical standpoint. Very good. Textbook even. You could even say that the probability of breaking the all-time high here is enormous. But remember, this is crypto. In crypto, flash crashes or completely unexpected events happen all the time. And it's not about selling all your spot holdings now just because you don't know what might happen. No, just make sure you protect yourself against such a possibility. Sell off 10 or 20% of your spot holdings, take any profits if you have them, or reduce your loss if your loss in the portfolio is simply large. If we see a drop, I'll show you at which levels it's worth buying back in for a continuation. Although looking at this chart here, we really have to take into account that this is the first time we're testing our ATH, so all this buy-side liquidity that's here is currently being tested after breaking the ATH, so it doesn't necessarily have to break through it. It could simply be a matter of collecting liquidity from this level and then seeing some kind of correction even down to 89,000, which is still our main support resistance to support flip. At this point, the main support is at $89,000 to $90,000. But listen, the Bitcoin Coinbase Premium Index, what does this chart tell us? Coinbase has joined the game, or rather, it joined in below $100,000, and now it's more like observing than making any major moves. Here, the purchases, around $93,777 were really significant. Interestingly, Coinbase, listen, started buying late, only at $93,000. And currently, the situation is such that retail investors have the best possible buying position because they were buying heavily from the bottom, especially through ETFs. For the first time, I can say that I'm seeing something like this, where institutions are buying at a premium from retail investors, but it seems that the big players froze on the news about the outflows, while retail decided to start following the buy the dip principle. And finally, it worked out for them. And that's exactly the thing that keeps bothering me. It really bothers me that the fat people have so easily given up on the streets and are now letting them earn money. It's not about the idea that just because retail finally got in at the right time and is able to profit, they'll definitely dump it now. Of course, you have to take that into account, but it's definitely not a determining factor, nor is it something that gives us a higher probability of a downturn. However, it truly is an extraordinary thing. I can't remember the last time it happened that so many people actually managed to get in at such good prices, with the price surge really being at a very high level, and where we have a real possibility of actually breaking through this all-time high. So just be happy. Definitely don't give up, and certainly don't make any strange moves here. Take profits, because we don't know what's going to happen. So I suggest taking any profits if you're in the green, so you don't end up regretting it later, thinking, I could have at least taken a little. and waited and then bought back in with those profits I took. And here, my dear friends, is the Bitcoin retail investor volume from $0 to $10,000 of 30-day demand. Here you have a perfect example of how much ETFs influence the market. At first glance, we can see that on this indicator, retail activity is minimal. That is, the orange line you see on the chart. It might seem as if they're not even present in the market. And as a result, my statements about the public supposedly driving things would be unfounded. But my dear friends, hold on. Take a look at the next on-chain metric, namely Bitcoin ETF close. But look here at what the situation was like on April 21st Street, when we were below $90,000. 2. Very strong bars indicating heavy buying from the ETFs, followed by another, larger one and many smaller ones. This is perfect proof that ETFs have pulled retail investors out of regular stock market trading, and as a result, the money is flowing only into Bitcoin and not into all the altcoins, because there are no ETFs for the alts. But that's what you wanted. After all, ETFs were supposed to make the market explode? Well, what really exploded was just the ground beneath it, because in my opinion, ETFs have seriously messed up the market. Why did they mess it up? Because a lot of people simply switched to buying Bitcoin ETFs or Ethereum ETFs, though mostly Bitcoin. A huge amount of liquidity really started to appear in Bitcoin. A lot more money, even though we're not hitting some crazy new all-time high compared to the previous bull run, but at the same time, there's an incredible drought when it comes to altcoins. That money was drained from altcoins into safer place, specifically ETFs, because keep in mind that the people who invested in altcoins during the last bull run were inexperienced. It was the typical retail crowd coming in at the last moment, pushing the price up, hoping to make some profit because everyone was starting to talk about cryptocurrencies. But today, they're a bit wiser. And instead of putting their money into altcoins, they're putting it into ETFs, since they're safer and more easily accessible. You don't have to bother with KYC transferring money and so on and so forth. So, in my opinion, the market has been completely ruined by ETFs. I'm talking specifically about the altcoin market here. And here, take a look. We see the Bitcoin spot cumulative volume delta. Here we have yet another argument that it's retail investors who are currently the main driving force behind these increases. The CVD on spot remains unchanged. You could say it's negative. As a result, we're currently mainly playing with leverage, and that's why we're so high up without having the volume. Of course, don't look at me as a perpetual bear who, no matter what you tell him, refuses to acknowledge that the situation has changed. It's just that the indicators, which I have quite a lot of experience analyzing, clearly show that we have an uptrend. We have beautiful, massive technical growth, but it's being built on shifting sands. At any moment, we could just sink into the ground. And that's exactly what I've been telling you for the past few days. Yes, technically, theoretically, by the book, we're flying to the moon. It's a beautiful pump, but something behind the curtain isn't right. That's why we're currently playing with the trend, but we absolutely remember to set a stop loss and take some profits. We don't wait for that to the moon, because I can already see that the same thing, as always, is starting again. So, in short, I'm warning you, and in return I get insults and comments saying I don't know what I'm talking about. Maybe I don't know, but my wallet says otherwise. But of course, when we crash, as usual, those who are barking the loudest right now will disappear, and we'll start the cycle all over again until they show up once more. So, my dear friends, I'll say it once again in this episode, and I'll keep saying it many, many more times in the next ones. Take any profits from your portfolio if you're in the green, or minimize your loss if you're in the red. Secure your positions with stop losses, collect profits as we move upward, because of course it's very likely that we'll reach that peak, but remember that a poorly built foundation can collapse, it can bring down the house at any unexpected moment, and right now, the foundations of growth in crypto are basically built on matchsticks. So my dear friends, it's better to be cautious, better safe than sorry. Of course, don't go all out either, because that doesn't make sense. I don't do that myself, but definitely something. Now let's move on to the stablecoin net position change. When it comes to the amount of stablecoins, the situation here remains unchanged. For nearly 3 months, we've been maintaining almost the same level of digital dollar inflows into the market with no significant fluctuations. Short-term hodler, person supply, in profit, the portfolio of short-term holders has entered the zone. of highest profits. Most of the Bitcoins held by short-term players are currently in profit. But what does it matter if the general public once again won't take this to heart? They'll be too excited by the current price increases, and of course we'll be waiting for a breakout to $130,000, $150,000, which at some point leads to a long squeeze. A squeeze on those people who are now going long at the top, who keep buying, and as usual, a removal of liquidity. So be careful, because when the delta is heavily loaded with longs, when everyone is in profit, even the short-term holders, you never know the day or the hour when you'll witness a total flash crash. Ways and exchanges with a balance change above 1,000 Bitcoins, so here we'll take a moment to look at the whales. The mega whales and exchanges will finally also stop selling. This is definitely a bullish signal. However, such a move above the zero line has already appeared several times, but only for a brief moment, so it's important to observe this indicator over a longer period of time. Usually, when we had these small blips, they were followed by sharp drops on the chart, and it was only after observing long-term increases on this very chart and breaking through our new issuance line that we actually saw real, strong growth. The Bitcoin reserve risk, BO, is a new chart indicator that quite accurately predicts all-time high and all-time low levels, and it clearly tells us whether there is room to push higher or not. At this point, it tells us that yes, there is. There is still room to move upward. The exact levels are not known, but the first area that this indicator should reach, day before we can start thinking about a top, is this orange zone here. And as you can see, there is still room to get there. And that's exactly what I'm telling you. Personally, I believe that there is still more growth to come. Personally, I believe that we will try to test the all-time high, and we might even surpass it, reaching around $116,000. Of course, I have levels for shorts or potential peak growths, not only at this level, but also higher up, but that's a different story. However, keep in mind here that there is actually a very small margin left for further growth. So of course you can wait, although I believe that you definitely need to secure your position. If we reach close to $110,000 or try to break through that level, you really need to be on high alert when it comes to your portfolio. My dear friends, BTC balance on exchange. The balance on exchanges is dropping. The balance on the exchanges keeps falling and falling. And you can see that it still can't find its bottom. We've already reached the level from the bear market bottom. Where will we go from here? No one knows that, my dear friends. But it definitely doesn't look good. And the divergence that's forming here is becoming more and more concerning. Of course, if Bitcoins are flowing out of exchanges, that's a good sign because it means people are starting to hold them for the long term. But you definitely can't interpret this chart literally, as if Bitcoins leaving exchanges automatically means we're going to keep pushing upward. The divergence is concerning. Of course, here it looks as if we might continue to see some pretty nice gains, but I would definitely be cautious with this indicator. It is also very often quite heavily manipulated. And here, listen, MicroStrategy, old data query-based, Sailor isn't stopping and keeps on buying. In my opinion, the guy has really fallen in love with Bitcoin. Even though we haven't heard much about strategy lately, still, he really is constantly making purchases here, although you can't fully rely on that anymore because whether it's a peak or a dip, he keeps buying anyway. You can see that he's in it for the long term, but ultimately, he cares more about his company's stock because it's obvious that if he keeps working with Bitcoin, he'll be able to continuously issue new shares and in doing so, earn more and more. Because in my opinion, Sailor cares more about profits from strategy stock than from Bitcoin itself. And here at this moment, we can see the number of Bitcoin entities with a balance greater than $1,000. Here you can clearly see how the whales play. Listen, whales are those biggest holders, owning more than 1,000 Bitcoins. They bought a lot starting from $41,000, only to sell practically everything they bought, around $103,000. Owning 1,000 Bitcoins bought at $50,000 and selling them for $100,000. You can imagine the kind of profits, the scale of gains they made. So we're still in what I'd call a gentle downward trend here, but let's take a very, very quick look at the charts before the Q&A. So coming back to Bitcoin here, listen, we really can push this price up. I'm bullish. We've tested the 0.5 level of the downward swing, so that's very nice, with a very quick, strong buyback, So we'll see what happens here. In my opinion, at this point, we're going to see a consolidation, which will guide us as to which direction the chart actually wants to go. Even if we look at the fair value gap plot, in reality, that fair value gap hasn't been filled, so it's clear here that the trend is strongly upward. In such a strong upward trend, we should expect corrections no greater than 40% of the swing. As for Ethereum, an incredible efficiency has also formed, which is the so-called fair value gap. There's a lack of sellers who eventually have to appear and restore balance to this chart. Don't be afraid here, because if we get corrections, and there are signs that the correction isn't particularly deep, it's simply a matter of balancing out this imbalance. Since the market moves in waves, we have an impulse and a correction must appear, so don't be afraid of these corrections. If everything indicates that we are still in an upward trend, it's worth simply joining in on Ethereum or other coins. Similarly, Sonic has broken nicely above the resistance zone. We'll see how the situation develops here. However, it's clear that even though Total 3 is starting to pick up, altcoins still haven't fully decided what they want to do. They're probably waiting for Bitcoin's move and whether it will try to break its ATH. If it does, they'll likely make a strong upward move. Or if not, we'll simply see a reversal there. There, we'll get nothing more than a retest of that position, and then we'll see declines, with altcoins returning once again to levels from around their bear market. This is Stasio. Say hello, Stasio. Stasio and I thank you for watching this episode. If you enjoyed it, give a thumbs up, subscribe, and hit the bell so I can get some snacks. For Staszek, of course. Staszek always has his snacks. Anyway, thank you very much for watching this episode. See you soon, and also on the live streams on YouTube. So take care for now. And Staszek also says bye-bye for now.